Hey, good morning. The sun came up. That means it's a work day. It's what, 3 hours before the open of trading on Wall Street? Yeah. It's our hour of power, our opportunity to get our global macro on. This is QuantBox Live, where we uncover AI driven data analysis of sentiment, inflation, employment, GDP, technical trades, right? Trends, open trade positioning, seasonality. And of course, I really should add to that, real time market sentiment. Okay. What are people thinking about, but what are they actually doing today? In fact, not just today, right now. So, anyways, global macroeconomics, all automated through artificial intelligence. This is all the stuff that institutional investors are doing to make their big decisions. But you can have the same power and the same tools to make the your investment and trading decisions as the big boys. But it's only $80 a month to have something that, you know, institutional investors probably spend tens of thousands of dollars per month to get the same information. So imagine after looking at all this data, you were able to have clarity of mind. What are the things you're interested in buying? What are the things you're interested in selling? And then what is going on right here, right now? Is there an opportunity presenting itself to you right now, fundamentally? Is something that should be trending up, down right now? Well, maybe that's your opportunity to buy a dip. But ultimately, we're trying to find trends so you have the confidence to let your winners run. Is institutional traders are not scalpers. They're in it for longer than 9 minutes. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. And thank you to Jim for letting us know that Turkey held interest rates. They're not raising anymore. Interest rates have peaked out probably at 45%. Sounds really good, huh? You can lend Turkey money and they'll pay you 45% per year. Well, the reason that's not a good deal is that they have 65% inflation. So in real terms, they pay you back with worthless money. So, yeah, they pay you 45 but you lose 20. Oh, that's why people don't do it. Uh-huh. Yeah. Yeah, interesting, huh? They might be in trouble. What do you think? Yeah. Boo, 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 boo. All right, for 4.33, still cuts being taken out of the market. That's where you want to start, right here. What this is telling us is investors are removing the interest rate cuts that they already priced in by the Fed. And now they're like, wait, the Fed's not going to cut. No, of course not. So they're cutting, but notice it's very, very slow now. We've been around 4.3, 4.2 for a long time. So that is stabilizing. Okay. Oil doing its thing. It's up, it's down. Okay. Definitely some opportunities to be trading in here for oil. Depends if you're long term long or not. A lot of crosswinds, OPEC cheating, for example. If global GDP is being revised down, then that can kill demand. So there's some supply issues, there's some demand issues. Hey, it's complicated. Okay, gold fairly stable. We've been below 2050. Oh, I don't know, for a month. S&P 500. We'll see. All right. Well, I guess we have to talk about Nvidia. I'm sure you've heard about it already, but let me cover it again. It was a great meeting. They made more money than anyone ever expected, and their future guidance was pretty good. They're going to make more money in the next 3 months. Okay, so that's good. They also said AI is at the tipping point or has crossed the tipping point where it's no longer like a fantasy where everyone's like hoping AI is going to be the future. They're like, yeah, it's done. It's happening. This is it. This is another internet. So if you miss the whole .com thing, because you're like, nobody's going to use this internet thing. It's just some email and porn, right? So a lot of people, that's what they said when I first started in the Silicon Valley in the early 90s. Right? No one's going to use this internet thing. Okay. Uh-huh. Well, okay. Don't miss this AI revolution. So, anywho, Bitcoin fairly stable. It was a little higher, it was a little lower, but fairly stable. All right, so let's take a look at the risk gauges. We had some off and then they've capitulated back. So, going back to Nvidia, um, it's up 15% pre-market. Hmm. Risk on. Yeah. Well, so yesterday these were ever so slightly risk off. Well, back to neutral. Okay. Just again, another red flag. It might be frustrating, but it's reality. My experience, if I may use myself as an example, um, in times when the market's not moving, that's when I lose the most amount of money. What I think is going to happen, I set up and then it doesn't fulfill. Then of course, and if you talk about the early days, what does an amateur do? Well, if your trade plan doesn't fulfill, then it must be reversing. So if it's not going to go up, it's going to go down, right? Remember that logic? You probably have tested that. Well, if it ain't going up, then it's going down, and then it doesn't fall either. And you're like, how can I lose money both ways? So I've matured. I've matured. And when I see nothing across the board as far as interest or trend, I become a conservative trader. And that's a survival skill. And we've been like this treading water now for five weeks, 6 weeks. Yeah, good, good. That's what you're supposed to be doing. Now, you can look at cross pairs or you can isolate an asset, but there's no intrinsic underlying trend. So, like a great asset that's been performing well is the Japanese stock market, which now officially has made a higher high, higher than the 1989 high. Huge. That stock market in, I don't know, the span of 3 years went from worthless to incredible rally. I mean, it rallied for 3 years. Anyway, so it's huge right now. But remember, that's the government buying their own stock market and the central bank making the currency nearly worthless. Well, that's what happens. Okay. So, anyways, wowzer, that's a big deal. Of course, our own Nazi's at all-time highs. So, anyways, that's cool. But if we get rid of these indices and get rid of Bitcoin, okay, now we get closer to a more normal distribution, let's say, data set. And I would say there's not a lot of good trend here. What you're normally looking for is something skewed this way or something skewed that way. And at first glance, it seems like there's a lot of stuff over here, but there's a lot of stuff over here, right? And so this is good and this is bad. And you're like, well, so is it risk on or risk off? It's mixed. And we already know that. We already know it's mixed. But there are things performing. So now you do a relative strength exercise. Okay. So this stuff is up. So yen is weak. So are all the yens weak? Kiwi is weak. CAD is weak. Pound is weak. I mean, yen versus these things. Okay. So Aussie yen up, Kiwi yen up, CAD yen up, pound yen up, Swissy yen up. Okay, so you could say, well, yen is weak. has been weak, and it's expected to be weak. So maybe you play some yens today, see if there's going to be further up. Euro yen showing euro is stronger than yen. Anything else going? CAD is stronger than Swissy, but Kiwi is stronger than CAD. Oh, dollar is strong versus Rand, but dollar's weak versus Kiwi. Kiwi's strong. Okay, so we see Kiwi is strong, Kiwi is strong, Kiwi is strong, Kiwi is strong. Okay, Kiwi is strong. Okay, stronger than Euro, you see? But Aussie's stronger than Kiwi. Ooh, so here's the other one. NZD and maybe AUD. Maybe for day trading, there's some up on those. You see? And we call that relative strength exercise. So now you're going to look at cross pairs. Okay. Aussie's very strong. 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 Okay. Aussie's very strong. Cool. All right. So maybe some commodity pairs today. Huh? So like we euro was fairly strong. Pound is a little bit weak relative to what it was doing before. Uh, okay, so maybe you do look at the yen pairs. Maybe that's the cleanest one. Like for example. Okay. So by the way, pay attention to these scores and the gauges because we are in development and changing. So, for example, 1, 2, 3, 4, 5, 6, 7, 8 measurements, but some of the measurements are even higher than just either good or bad. Like the economy here is very favorably not good in Australia. So, anyways, a -2. So this score can actually go now. I think it's 11, maybe even 12. And so this might be different than this gauge. And we're up going page by page by page. You'd think you'd update at one spot and it would update everywhere. No, it's a pain. It's a lot of development work. QuantBox is expensive, but we're in that process of making the numbers more sensitive, and therefore they can move with greater degree of accuracy, if you will, or sensitivity, than just like good, bad, gooder, and worser. A little more. So, anyways, it's just better, is what I'm trying to say in English. So we'll get there. And then that's why, like, it should look, you would say, well, shouldn't this show risk on? Yeah, well, the gauge needs to change because it looks like it's still scoring 6 as being the biggest number, not 11. So, anyways, we'll get there. But what's going on is if you wanted to buy it, okay, is the technical trend good? Yeah, cool. Excuse me. Okay. Australia, GDP 0.2, but it's negative in Japan. Remember, Japan is in recession, technical recession. They have 2 negative GDP quarters in a row. In fact, the negative one is a good improvement. Wow, huh? Yeah. Inflation is still too high in Australia. It's improving, but it's still way too high relative to, let's say, North American peers. Canada, the United States, compared to Europe. Okay. That's closer. I think UK has inflation about that high, but not Europe. Okay. So Japanese yen here, 2.6. Now, Japan is dealing with this because when you read the central bank reports, they're talking about the opposite problem that all the other countries around the world have. Because I read all the reports, every single one of these reports. And around the world, governments say, well, wage inflation is sticky and will not come down. Goods and services have come down, but wages won't come down. Well, in Japan, it's the opposite. They can't get wages to go up. It's been generations since people have received a wage increase, right? Because they haven't had an inflation. Now they have some inflation, like 2.6 is in crazy high inflation for Japan. But no one is asking for a raise because it would be impolite. It'd be embarrassing. Boss, I'm getting crushed by inflation. Can I have a raise? No, just be quiet, right? Risk says, I'm sorry, Boris says, why do we have risk on despite the confirmation that no more than three cuts? Uh, oh, are you talking about the meeting minutes? Well, let me read it line by line with you guys on Tuesday. We'll go through it then. But ultimately, look, the Fed's supposed to cut. So if it's June or July or August, one way of looking at it, Boris, is people just are they going to cut or not? Yes, they're definitely going to cut. Then good. That's good. That's good. The other part of it, Boris, is not what's in the meeting minutes, but the people that need to invest before the election. Because the markets don't tend to do well leading up to the election. So one of the things I proposed in the January presentation that I did on the Outlook was that money would need to be deployed early in the game. Okay. And then a giant fizzle for months on end. And well, we're treading water, and now Nvidia's the last big, I mean, we're done. We're done with earnings season. Let's just say it that way. And so, what's the next catalyst to get the stock market to go up even higher and higher and higher? I mean, the catalyst today is, oh, game on, right? But what about in 2 weeks, 3 weeks? We've run out of reason to deploy capital. And so, uh, you know, we'll see what happens then, but probably less up than what we've seen so far. So, yeah. And then you would see probably market action closer to what you would expect. Is it FOMO? No, I think it's more like it comes from game theory. Okay, so at least that's how I would think of it and interpret it. So when in seasonality, so let's say this is a good time to buy the yens and this is a good time to buy the yens. But if this year is slightly different because of the election, um, it moves in my mind. I'd have to prove it to you, but in my mind, okay, I have the rally here this year, not there. And so now you have to do something like, okay, we're not going to invest this year until the end of November, early December. So we're going to do nothing for 11 months. People are like, well, we can't do nothing for 11 months, right? So when do you invest? And you're like, well, we know normally there's sort of a drought in here. So now your choice, and this drought would be extended longer than normal. So now it's like, okay, because of that's not being a good time to put capital to work, we can wait till December, but then that means we do nothing now for all that time. So I guess I have to deploy early. In particular, if you thought, and again, this is how I think, I don't know the rest of the market, but there's often a move here and there's often a move here. So this move has gone this way. So maybe this move has gone that way. Got to get in early and then ride out the storm and then catch the late move. So I wouldn't say it's FOMO. It's more like just early bidding. Because I don't think anyone wants to do nothing when it comes to institutional investors. If your strategy is do nothing, nobody wants to pay you for that, right? So you got to do something. Yeah, we'll see. Now with some of the AI stocks, there's probably FOMO, but those people lose money. They'll buy it way late. They should have bought it 2 years ago, right? Now they're buying it now at the 40 times earnings. Okay, then we go into our dry patch, which I don't know if it'll show up, but I've planned for it. I talked about it 6 weeks ago that that's what I think is going to happen. So if we go now into the desert of the volatility desert, um, then the people that bought some of these companies up here are going to, let's say, suffer. I'll just make up a thing of 10%, right? Let's say it slowly for 9 months. Let's say that the S&P 500 loses 1% a month for the next 8, 9, 10 months, right? Or whatever amount of time is left. So it's a real slow move, but many of the investors that bought, let's say, buy Nvidia today. They bought it today. They didn't like it a week ago. They didn't like it a month ago. They didn't like it a quarter ago. Like now they like it. So they buy it now. And then how far is their stop loss? How much money are they willing to lose? Very often 10% is a big number for a lot of people. I don't know. And so it comes all the way down and right before the election, they finally capitulate. They take the big loss, and then we buy it. We just happen to know, or at least we just happen to believe, that the weather patterns have changed because this year is El Nino or something. We just know the fourth year of a political election cycle changes this normal pattern for Aussie yen, shifts earlier this year and then shifts later this year. And we know that, and everybody else don't. Okay. So I would, and I've been planning my own portfolio this way. I don't know the future, but I would suspect it kind of ends up doing this year. But I said this back in January during the outlook, so it's not new. And in 4 years, I'll think the same way. And that's how I thought 4 years ago, and 4 years ago before that, right? So that's just the pattern. Cool. But look at the carry you're picking up on this Aussie yen. It's pretty serious. That's a pretty good carry. Leveraged 100 to 1, you're like, "Oh man, I'm only making 450% return on investment on my 450% internal rate of return, not return on investment. Your IRR on that is 445% if you were leveraged 100 to 1." And you're like, "Woo, that's nice." But if you're in America, sorry, it's only 225% because you're only leveraged 51. Wait, only 225%? And that's just on the income. That doesn't even count the up on Aussie yen. Cool. So anyways, there's room for this to move. Okay. There's room, right? And then for shizzle fizzle out. So according to QuantBox, you probably have an extra month or so. Okay. That's good. 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 So I think I'll leave it at that. We're going to need the stock markets to lead the way today, and it feels like the open is going to be a big up. Everyone wants Nvidia now. They didn't like it yesterday for some reason. They didn't like it when it dropped 8%, but now they love it. Now that it's up 15, you're like, dude, why didn't you buy it yesterday? Well, I didn't love it yesterday. I sink when I see stuff like that. You got, in my humble opinion, it's wise to have a longer term point of view than a half a day. But to each his own. Okay. Some traders just need to be a liquidity event for the others. So okay. It's how it works. It's how it works. I'm not here to tell you how to dance. Right? You can do you can dance like this if you want. No one's gonna make love or make love, make fun of you. But anyways, I better go before I stick my foot in my mouth. All right. Peace on earth. May the pips be with you. May your profits be above average. Look, I'm maturing. I'm maturing. Yeah. Yeah. That's good. That's good news. So I'll see you later today. Oh, if you're in investor boot camp, swing, or day trading group, we are planning all of next week. Okay. All of next week. Yeah. Like all of the reindeer. So I will see you later today. Remember, investorbootcamp.com. Join the swing trading group or the day trading group. I'll see you around. Cheers.